Hello and welcome to CNC World, broadcasting in North America and around the globe. I'm Xie He in Washington. Today we're joined by Mr. Roncevert Elmond, partner at the WICKS Group, PLLC. Mr. Elmond, welcome to our show.
Thank you.
Well, the trade tension between the U.S. and China is ratcheted up following U.S. President Donald Trump's instruction for officials to consider imposing tariffs on a further $100 billion worth of Chinese goods. Well, this is a huge number, Mr. Elmond. Did you see this coming?
Personally, I did not see this coming. I think it was an impulsive, surprise move by Mr. Trump. Perhaps we should have seen this coming because Mr. Trump tends to operate and negotiate in a surprising manner. So, when he made this statement yesterday in West Virginia of putting on $100 billion more tariffs on goods from China, ratcheting it up, essentially the tension here. It was surprising, but it's not, because I think he was reacting in what happened the day before when China quickly responded to the $50 billion tariffs proposed by Washington earlier this week and said, well, okay, we're going to do the same $50 billion, and we're going to go after two key exports, soybeans and aircraft, which are two of the largest exports from the United States. And so I think Trump felt the need or the urgency to respond to that immediately as well.
So China responded very quickly this morning. A spokesman for the Chinese Ministry of Commerce said that China is fully prepared now and will fight back if U.S. does impose the sanction, the tariffs. So do you think these tit-for-tat moves will finally lead to a trade war?
My personal hope is it will not lead to that outcome. But what we do see here is an escalation in threats, right? So we started off at the beginning of last month with the steel and aluminum tariffs, and then we saw some walking back by Mr. Trump in relation to those. Most recently, we see, of course, these tariffs directed straight at China under what they call Section 301, following a Section 301 investigation involving intellectual property rights and technology transfer, in which the Trump administration targeted specific products within China related to machinery and high-tech goods. And then, of course, China responded in kind, but this time targeting agriculture products and, as we said before, aerospace products. And now we've seen the proposal for $100 billion. We don't know what that means in practice. I'm sure that'll get fleshed out in the coming weeks. But China is preparing to respond in kind. And look, is this just getting towards a negotiation? Will we ever get to a negotiation if we continue down these threats? In the near term, I'm sure we can expect costs, for example, in the stock market. When China came out with this announcements regarding aircraft, for example, Boeing stock fell 6% immediately. So you'll see stock market gyrations, and there's certain costs involved with that. But we also might see costs related to that are hidden costs. In other words, people's faith in the economic system, global economic system. And if that gets shaken to a certain extent, then you're going to see other barriers that could raise costs for everybody.
So let's talk about Trump's policy for a little bit more. He is always practicing unilateralism, trade protectionism, and some is saying that he is anti-globalization. So these policies, it has been following him since his campaign trail and all the way into the White House. And do you think if a trade war does break out, the U.S. will benefit from it?
Well, ultimately, I don't think the United States would benefit from a trade war, just like I don't think China would benefit from a trade war or any other global economy, power or state that's plugged into the global economy, because we all have a lot to lose here. But you're right. Trump's protectionist policies, his trade policies, date back to the campaign trail, but date back to when he was just a businessman, where he was always arguing against trade imbalances and saying back in the 1980s when Japan was a threat, supposed threat to U.S. prosperity, he attacked Japanese imports. So this has been a long thread for Mr. Trump throughout his career, and of course he campaigned on this quite explicitly in 2015, 2016, ultimately leading to this 2016 election, where he said America first. and I'm going to do everything I can to protect the industrial base of the United States, the American worker. And I can only say that he must believe what he says because he's following through with this protectionist plan, this America First strategy. Whether that's ultimately beneficial to the American worker, that remains to be seen. And whether that's ultimately a good political move, that remains to be seen too. But he's certainly testing the proposition of whether this is a good idea or not. Personally, I'm not sure that that his strategy is well thought through, that he understands exactly where he's leading the United States, and quite frankly, the global economy. And like I said before, there'll be costs for everyone if we get into a trade war.
So these tensions these days, it has rattled the stock market and sent worries to local people on both sides. So what do you think are the impacts on the local people here in the U.S.?
Well, first of all, the impact was going to be psychological first, because we haven't seen these tariffs actually be executed. But you talked about the stock market. So people are watching their 401k, their retirements, their investments, and they're seeing these wild gyrations in the stock market, which is ironic because at the end of the last year, Mr. Trump and the administration were touting how great the stock market was doing. And they were talking about all this economic success that came from their deregulation efforts and the tax reform. But those gains could be lost in a trade war. So it seems that there's some irony or a conflict between Trump's stated goal to grow the U.S. economy and then also engage in this global trade war, which could damage the U.S. economy. Because quite frankly, the world is interdependent. Global supply chains don't just involve the U.S. workers, they involve workers in China, workers in Mexico, transshipments through Panama. I mean, the world is in a connected place, so you can't just simply withdraw from the world economy and expect that there's going to be no cost to that.
So, what do you think will be China's next move? Do you see a negotiation in sight?
I do believe that they will respond in some measure, and how they respond is very important, I believe, because we saw when China responded very quickly in a tit-for-tat, $50 billion on U.S. goods, important U.S. goods, even though aircraft and then soybeans and other targeted goods. We saw Trump respond very impulsively to that. I would hope that China would think about a lengthier deliberation in the next round. Partly because I think the limits to this game. There are limits to this game. For example, China exported $500 billion worth of goods to the U.S. market. U.S. exported $150 billion to the Chinese market. So what China can impose in terms of tariffs on the U.S. exports is much less than what the United States can do to China because of just the trade deficit there. So at some point, we're going to have 100% tariffs on all the goods coming out of the United States very quickly, right? If China were to respond in kind. So there's almost a limit to what we can do in terms of back and forth and instituting tariffs. I think what really needs to happen is a dialogue, a high-level dialogue that just cuts to the chase and says, where the United States says, okay, here's what we want. China says, here's what we want, and they negotiate from there instead of this posturing, which again, there's only limits to what we can do given the numbers involved.
So I think we have to hope for the best and hope for the two sides to sit down and have a dialogue. Okay.
Absolutely.
Thank you, Mr. Ellman, for your time. And that's all for today's special report. I am Xie Ge in Washington. Bye for now.